Hi, my name is Roger Schluter. This video is actually about personal loans, the advantages and the risk of them. Um, Personal loans basically are smaller loans, and they're done by banks or they're done by a lot of online institutions, and they basically just base them on the credit of the individual, and they base them on the money that they bring in, usually their salary or whatever. And they're personal loans. People have used them for taking a vacation. They use them to buy a big appliance, maybe. They use them for different things, but they are based on those things. Um, so anyway, personal loans can be used to fund a small business, a relatively small business, but personal loans are funded for between like $1,000 and $50,000. Even at $50,000, this is a relatively, small business loan. So anyway, SBA business loans are funded by banks, usually start at about 100,000. So the personal loan is filling a small niche that most banks do not want to fund, not for business loans. So anyway, and in the personal loan, really they're basing it on the credit score, and they're basing it on the person's income, and they're basing it on probably the debt they already have to make sure they can pay it. So anyway, please subscribe and hit the bell for future videos. Please also share and like the video if you learned anything new. So anyway, the advantages of the personal loans are as follows. Number one, the small size of personal loans is unique to personal loans. Most banks are not eager to fund business loan projects of the size of like 1,000 to 50,000. So the personal loan could be used as part of a larger project for working capital or some other smaller cost, such as marketing or equipment. But usually, banks don't want to do a business loan for 1,000 to 50,000, but they will do a personal loan because they are basing it on the income the person has, and they're also basing it on their credit. And if the person has good credit and they bring enough money to pay it off, usually they'll do it. And you can find banks do it. You can find a lot of companies online will do it. Just check out the companies online a little closer than your local bank, though. Number two, personal loans can be easier to qualify for than a business loan. A business loan, they're going to ask for all sorts of financial statements. They're going to ask for everything. On a personal loan, I mean, really, they're just asking. They're going to run your credit, and they're going to ask to see some pay stubs or something. I mean, it's pretty quick. Um, Number three, the flexibility of the loan proceeds. Usually, you can use the money for whatever you want. Most bankers, no matter how they loan the money, let's say you have cash in the bank and you say, I want to borrow the money and use my cash as collateral. Well, you'd think that's the absolute best. But banks will still want to know what you want to use it for. I mean, they really don't kind of want you to just go to Vegas. And I mean, but if it's a vacation, that's different. But they just don't want you to go blow it. So anyway, they will ask you what it's for, but you can always say, it's for this, it's for that. You don't have to, and I'm not saying you want to lie, but if you're going to use it for a business purpose, you really don't want the bank to know, just tell them you're going to go on vacation. Tell them you're going to do something else. You're going to buy a new car, or you're going to, well, not buy a new car because they'll want to finance it, but, something like that, and anything else. And then number four, personal loans are usually unsecured, which means there's no collateral in this type of loan, but there could be. So the bank could go ahead and take a lien on your house, take a lien on your car. He could do quite a bit of things like that. Number five, this is a personal loan, so usually the lender is not going to want to see business details like tax returns, financial statements, organizational documents. He's really not going to care. This is a personal type thing, and as long as you're personal, as long as you got the income to pay it, and as long as you have a good credit score. As long as you have a good credit score and as long as you have good credit, then yeah, there's no problem. So anyway, the number six would be interest rates are usually lower than credit cards, and the loan will usually have fixed payments, and they're not that long. So, but usually the interest rates are lower than credit cards, probably higher than your mortgage would be. But and then usually they'll fix the payments, which is really nice. Of course, you could have a variable rate, which will go up with interest rates. Number 7, interest on the personal loan would be deductible if you can prove that you use the money for business purposes. You don't want to prove it to the bank, you need to prove it to the IRS. So you can go ahead and use it. It can be deductible, but you need to you need to have some basis for the IRS so that if you're audited, that you can actually show it was used for the business. Number 8, personal loans can be funded in 1 day or 2 days. Bank and SBA loans may take several weeks. So, these personal loans can be done, sometimes in like 1 day. I mean, a bank can usually turn it out, that afternoon. A lot of times if you do it online, they can do it the same day also. So, that's the quickness of it is very good. And then number 9, personal loans are based, like I said, on the personal credit and your income, which can be from a personal job. So, there's nothing else they're looking at really on a personal loan. They can, but usually they're not. And then personal credit is used to determine the rate of the interest on the loan. Many personal loans have a lower bar for the credit score. If you get, if you know the bank, I mean, if you go to a bank and it's a local bank and you deal with them on other things, I'm sure they'll work with you on the, if you have kind of a lower credit score. I know the online, a lot of times they base the interest rate on the credit risk, perceived credit risk. So if you have an impeccable credit rating, then you'll get a low rate. And then if you have a not so good credit score, then you may get a higher rate. But usually you can find the money. Now, there are a lot of risks in getting a personal loan. The first one would be most personal loans are unsecured, but the lending institution can ask for collateral. They can either take your car or your home or really whatever. I mean, they could take personal collateral. So that is one thing, but usually not, and usually online lenders will not. Number 2 of the risks are unsecured personal loans will be tied to credit and income and could hurt your credit if not paid because they will report it to the credit bureau. Sometimes business loans aren't really reported to the credit bureau. I've seen many a time when they're not. Usually they are, but I've seen times when they're not. And always all personal loans, house loans, cars loans, everything, it'll always go to the credit bureau. So, if you don't pay it, you're going to hurt your credit. Another risk would be the personal loans are usually paid back in 3 to 5 years, which is a short payback when compared to SBA loans, which usually have a payback of 10 to 25 years. So anyway, when you get that personal loan, don't expect them to give you a 10-year note. They're probably going to give you, probably going to fix the rate, but they're only going to make it for 3 to 5 years, which is a pretty short payback. And usually they're dealing with smaller amounts, so it's really not that big of a payment there. Another one of the risks, number 4, is the interest on a personal loan may not be tax deductible. You'll have to ask your accountant or tax preparer. But I tell you, they could not be. It could be, and I'm not your tax person, so I'm not going to make that distinction. But usually, the ultimate judge of whether it is tax deductible or not is the IRS. And if they audit you and they say this doesn't work, then you're going to have to cough up some more money. So that's the only problem with that. Another risk is just as the amount of a personal loan could be an advantage. If you need a larger amount than the small amount of a personal loan, the 1,000 to 50,000 or whatever, this could be a real disadvantage. Especially if you try to use it for a business, you really don't want to underfund, to where you go out of business just because you don't have enough money. So, and that could happen, and that is a risk. Number 6, another risk is you may want to shop the rate of the personal loan because these rates of interest can vary from lender to lender. So it is a risk on the rate. I mean, don't just figure you're getting the best rate. I would shop around a little bit just to make sure you're not getting taken. Number 7, another risk is individuals with no credit will have to reestablish their credit. To most lenders, no credit is as bad credit. And I absolutely know this, absolutely. When I was a banker, it's no way you could get it approved if the person didn't have credit. And your bosses would tell you, no credit, is just like bad credit. We don't do loans with people with no credit. So anyway, so that's that. Number 8, another risk, to doing a personal loan would be fees can be high on personal loans. Some personal loans have origination fees that can be up to 15% of a loan amount. They will either add the fee to the loan or they'll subtract the fee from the amount that you receive. So, I mean, you think you're getting this much, and all of a sudden you have these fees, and they subtract them, and you end up receiving a lot less. So make sure if there's fees, make sure on how they're gonna charge them. Are they gonna add them to the loan, or are they gonna go ahead and take it out of the money you're gonna get? Another risk, number 9, is some personal loans have prepayment penalties that impose a fee if you pay off the loan early. So you want to ask your lender if this loan has a prepayment penalty. Always check your loan agreement for this fee also. Check your agreements that you sign, and also check with the bank. Usually if you ask the loan officer, you're good. The person doing the loan, I mean, they'll usually tell you whether there is or not. So, but prepayments, if you want to prepay and you really can't, that could be a problem. Another risk is that the credit hits can be damaging to your credit if you shop the loan with different lenders and they all pull your credit. So you really want to ask the lender. A lot of times if you pull them all in the same time, then supposedly the credit agency will just report it as like 1 or 2 pulls and won't do it for all of them. But you can always ask the lender to pull the credit using a soft credit inquiry. When you use a soft credit inquiry, it really is not a hard pull, so it really doesn't go against your credit. And the other thing is, you can always ask them, say, hey, wait until I'm approved in every other way before you run my credit. So you're just not running the credit willy-nilly, and he actually denies it for other reasons. So anyway, as you can see, a personal loan can be helpful, and it can also be kind of dangerous. It can be, there's a lot of pitfalls. Please check out the company and the loan product to see that it helps your project. Please subscribe and hit the bell for notice of future videos. And remember to share and like the videos, especially if you found any value there. So anyway, my name is Roger Schlueter, and I will see you in the next video. Thanks.